Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In this video, we are talking about Williams-Sonoma. This is one of the companies that I have talked about in the last video, just very briefly. And in today's video, I want to talk about a little bit more detail, see what the business does, and then look at the financials, and then kind of give you my overview. Inshallah, Ramadan will possibly be this Thursday, and inshallah, what I'm going to do from there onwards, I'll still post every day, every other day, but I will make sure the videos are very short. So inshallah, I'm going to try to make it 10-minute videos, inshallah, long, no longer than that, just to kind of give it. Obviously we need to spend a lot more time doing ibadah rather than just obviously watching videos. As beneficial as the videos are, we still need obviously to do a bit more ibadah, because Ramadan is absolutely a wonderful time for all of us, and may Allah accept our du'as. Now, the portfolio is doing all right, 67,000 today. Yesterday and today the market has been up quite a bit, so for that reason is actually doing okay. I've added about £600, over £600 today. I bought a couple of companies. I'll share that on the. I've added to. I haven't bought anything new. I've added to some of the companies that I own already. I'll share that on the Discord in a bit, and then we have £1,000 left to spend until the 7th of April. So in 2 weeks' time, we should be basically maxing this account, and inshallah we're on track, and alhamdulillah we're getting there. Now let's talk about this company first of all. So this company, like I said, is Williams-Sonoma. They do own, basically sell all these type of products. They own companies like Poultry Bank Kids, and they own West Elm and other brands that I've actually not come across yet. They seem to be, in terms of financials, they seem to be doing really good, and that's why I was attracted to, especially from dividend side of things, especially from buybacks and things like that. So I want to go into a little bit more detail in a second, but before we do that, if you haven't joined us on the Discord and the Patreon account, please do so. It actually helps the channel, obviously, and at the same time there are things that you can obviously benefit from, inshallah, things like the dividend trackers and so on, the ETF trackers, the Discord, where you can, inshallah, where we're trying to build a community of like-minded people that will help each other in the long run, and obviously obviously helps the channel as well. Right, let's talk about the company first. The name of the company is Williams-Sonoma. It operates basically it's as a retailer, like I've already said, in terms of cookware, tools, electronics, basically cutleries, tabletop, and you name it, they own all of these things. Like I've already said, they own these brands as well. Currently trading $123 per share. Again, this is one of the companies that is very cyclical, so you have to be careful. When the economy is doing well, these companies will do well. And if they're not doing well, obviously the economy is not doing well, they don't do well at all. So the currently trading $123 per share. A year to date is actually up 7%, but it is in terms of price. Let me actually quickly show you. For 1 year, it's actually down about 22%. So at one point, this stock basically was $160 per share, and from there onwards, it's down about 27% from where it was. So in August of 2020, it was almost 170, and right now we're looking about 120. So it actually bounced back a little bit if you think about it. In terms of 5-year total returns is 142%. In terms of EPS, is really good, $16.32, market cap of only $8 billion. So it's not a huge company if you think about it. It has a narrow economic mode, and the beta is quite volatile, which is actually interesting, because you would think this type of businesses wouldn't be that volatile. PE is only 7. Forward PE is about 8, for 5-year average of 14. So it seems cheap in comparison to, obviously, relative to the sector as well. Price to free cash flow, just also 10. Dividend yields, this is where the company shines, okay? The dividend yields right now is about 3%. The latest increase was 15%. It was one of the companies that I've talked about in the last video. If you haven't seen it, go and watch that video where we talked about 6, I think it was, different companies that have increased their dividend recently. 5-year growth rate of that cannot be it. I need to double check this. In fact, let's go to this website. Yeah, it's 15%. It's not 100. Yeah, sometimes this is basically information. I extracted this information from different websites, so this one is not the truth. It's not 140%, 120%, like 1,000. 200%. That's definitely not. So annual payout, we're looking at $3.60. Ex-dividend is actually 20th of April. Dividend growth streaks of 12 years. So they've increased this dividend for 12 years in a row, and the payout ratio is only 17% of the net income, which is really good. For 80% in terms of dividend safety. In terms of free cash flow, I would have liked if this company had maybe $1 billion or so, but again, the market cap is only $1 billion something, so it's a small cap company. So $851 million, and the free cash flow yield of 9%, which is absolutely huge, because remember the market cap is quite low as well. So profit margin, we're looking at about 13.5. Operating margin of 17%, but let's call it 18%. Return on equity at about 83%. Total return in the last 10 years, we're looking at about almost 12%. And the return on invested capital of 68%, which is really huge. The revenue in the last 5 years grew in the last 5 years and almost 11%. And current ratio is above 1. So it's healthy business, to be honest with you. And this dividend is well covered within this basically excellent free cash flow they have right now. And in terms of valuations, according to different analysts, right now we're looking at, in terms of the EPS growth, we're looking at about 1.3% for basically next year, and then almost 9% the next 5 years, which is actually quite good for this type of business. Currently trading $123 per share. According to Simply Wall Street, we look basically, they saying it's basically discounted right now, 55% undervalued at the moment, which is absolutely huge. Their price target is $267. That's, if that happens, it's just like you doubling your money just easily. And this is one of the other things that basically that attracted me to do this video, right? It seems a solid business is really undervalued at the moment, according to these two companies, right? Fairly valued value is 233 according to Morningstar, almost a 50% discount right now. And these two companies, Seeking Alpha and TipRank, is actually basically more or less the same, because they do use the same analysts more or less. And according to Seeking Alpha, is actually a hold. So I do like Morningstar normally. So that they're saying about 50% right now discounted, which is absolutely huge if you think about it. In terms of Sharia compliance side of things, is absolutely no issue. 17%, 17.5% in terms of interest-bearing debt. Again, we're looking for 33 or more, just to become non-compliant, if you like. Shares outstanding, as you can see, they have been buying their own shares, which is absolutely huge, right? So the company is paying you 3% in dividends, as well as obviously buying back their own shares. They have an excellent free cash flow yield. Okay, they're profitable business. They seem to be undervalued at the moment. So if anyone out there is looking for like a small cap company where they can potentially, you know, just hold on for, I don't know, for another 5 to 10 years, and they like the business, they understand how it works, the fact it's cyclical kind of business, then obviously it might be an interesting company to look at. In terms of revenue, we're looking at basically, if we take out the estimates, as you can see, it's been heading the right direction. But next year, they're expecting the earnings, the basic revenue to slightly decline. So from 8.67 to 8.34. So not that much really. And then it will bounce back afterwards. Same thing goes for EPS. So if we take out the estimates, you can see it was heading the right direction. And right now they're expecting a little bit of decline from $16.42 to 13.69, and then it will bounce back after that to 14.35. So yeah, so it's basically 1 year of decline expected, and then after that it will bounce back. So it seems a solid business. The other thing I want to show you quickly is since they've started paying dividends in 2013, I think, or to whatever it was, or 2006, sorry, they have increased this dividend every single year. There was not one time they made a cut. I can't see. It looks like the graph is just like every basically couple of years they actually increase it, which is really good. I mean, this is the type of business that you want to own in the long run in your portfolio. And according to basically the sector, relative sector, basically they get an A against consecutive years of dividend payment, they get a B. So 16 years or whatever it is that they've increased that dividend or paid that dividend, if you like, is actually wonderful. And according to Seeking Alpha, so Seeking Alpha has let me show you the ratings, okay? They normally have different ratings. The quant ratings, which is the built-in system that they use. And then you've got the authors, people that write articles for this company. And you can see it's normally they don't have a buy in a lot of the companies, but they do actually have a bias in, okay? but Wall Street is the one that has actually hold normally, and that's the one I used to for this analysis here. Okay, so this comes from the normal analyst. But if you're looking for the Seeking Alpha community, which is a kind of dividend investment driven kind of people, by the way, if you haven't got subscription to this, it's actually not subscription, but if you're interested, have a look at this Seeking Alpha. It's actually quite good in terms of they do have articles and so on. Right now I have a subscription because I wanted to test it out. I'll let you know what I think, but it's quite nice to kind of see what the other like-minded investors actually think about certain companies. Some of them will be biased, obviously, you have to be careful, but you get those, and then you get a few articles about the companies, which is quite nice and so on. But yeah, that's the company that I want to talk about today and bring it to your attention. Again, this is not investment like advice or anything like that, but you're gonna have to do your own research and so on. But the most important thing is that, you know, I'm sharing this with you. If you're interested, go away and do your research, inshallah, and let me know if you have any questions. If you haven't liked the video, please do it. You know, it helps the channel. Join us on the Discord, inshallah. I've got now about 500 something to spend today, but I might not actually spend all of it today, but by the end of this week, inshallah. The markets are up today and yesterday, so I've got a few companies that actually in mind that are in my watch list. Again, you can get hold of the watch list if you're interested. Okay, I'm going to stop right there. Have a wonderful day. Assalamu Alaikum.